Hello and welcome to Policy Watch, your packed snapshot of the week's biggest business events, their context, their relevance and impact. I'm Govindraj, Ethiraj. The BRICS nations, India, China, Russia, Brazil and South Africa have announced their intention to set up a BRICS bank with an initial capital of $100 billion and with a paid-up capital of $50 billion. Now, India will head this Shanghai-based bank for the first 6 years. After that, its presidency will be passed on to Brazil and Russia for 5 years each in that order, as per an agreement reached at the BRICS summit held in Fortaleza, Brazil this week. The bank is expected to be operational in the next 2 years. The BRICS nations also agreed on a $100 billion currency reserve agreement to help members deal with short-term liquidity pressure. China would contribute $41 billion. India, Russia and Brazil would bring in $18 billion each, followed by $5 billion to be provided by South Africa. Brazilian President Dilma Rousseff said BRICS Bank would help contain the volatility faced by diverse economies as a result of the tapering of the United States monetary policy. The Indian Prime Minister Narendra Modi said the bank would benefit member nations but would also help other developing nations. Mr. Modi said the bank would be rooted in the experience of developing nations. The creation of the BRICS Bank is seen as a major reshaping of global financial system dominated by the IMF and World Bank that are controlled by Western countries. Joining me now to discuss this is DK Joshi, Chief Economist at ratings agency CRISIL. Mr. Joshi, thank you very much for being with us. So tell us, was this something that an idea whose time has come?
Well, I
to
think,
use the cliche.
Yeah, well, looks like. I mean, this was being planned for a long time, and I think all the BRICS nations, I think they are diverse nations because the per capita income varies quite a bit within these countries. But I think all of them have one common feature. They all have a potential to grow fast. They have big domestic markets, and it's a kind of an exclusive club. Where the funding constraints that they face could be addressed by coming
So
together.
What are the key funding constraints, and let's look at it now from an India point of view. Is it to do more with shocks, or is it to do with long-going financing for infrastructure and so on?
They'll have to balance both. I think shocks, because it's like the role of IMF, etc. During crisis, it comes into play, and I think that that part of the job will have to be done by this bank. But I think more important from India's perspective is that if you want to create infrastructure, build infrastructure, it can provide development finance. I mean, so it can act as a development finance institution. So it's like structurally it would be like World Bank or IMF, but I think in practice it will cater to a much smaller set of countries.
And does a country like India face funding constraints, or is it something that it has to fight for?
Well, it does, and
it's a very general question, but I'll come to this specific.
It does. I mean, if you look at infrastructure, I think there are issues of bottlenecks on the ground, but there are also issues of funding. I mean, so if funding, long-term development finance funding is available, we don't have those institutions now. We used to have them, but they've been they've dwindled in value, so to say.
Right.
So I think.
So you see this bank actually filling a gap which has been left behind by other multilateral institutions.
It has a potential to do that, and but it's too early days. I mean, we have to see how it shapes up. But I think looks promising, and if I think once we get more clarity on how its functions and how it is going to do that, I think then one can.
So you see it playing a big role in infrastructure in India. So what's the kind of gap do you foresee, or do you feel that a bank like this could potentially fill?
Well, it's a long-term funding. I mean, long-term funding is a critical issue for infra. And
so let's say for the next 10 years, India needs X.
Yeah, it needs X. A part of it will come from here. I think there are many other things that are being done. Even I think few days back, RBI allowed banks to lend for infrastructure by freeing them of the SLR constraints.
Right.
And then I think there are other issues being talked about. You can have funding tie-ups with Japan and other economies. So I think all of these will have to come together.
So you're saying that in any way we were moving to a world where there were more funding sources that were getting lined up, and this contributes at the right time, at the right place.
Yeah, and I think it deals specifically with BRICS. So I think, and BRICS economies do face turmoil. I think if you were mentioning about the Fed tapering, I think which we have taken well. But if you notice what happened last year in August, July, I think rupee was completely plunging. So I think the short-term liquidity constraints, I think can be addressed, even if in a small manner, but they can be addressed through this.
Right. So how does India ensure that it gets its right sort of share of this, the bank and its time and its effort and of course funding?
Well, I think we are getting to head it. I think though it will be positioned in China, but I think getting to head it also, I think As I said, I think we'll get more clarity as the days go by. I think it's hard to visualize how exactly it will shape up. But I think looks like initial signs are positive, and I think there's lot of.
And does this also say something about the very nature of multilateral institutions or development funding? We thought in some ways that had gone away.
As I said, I think we'll get more clarity as the days go by. I think it's hard to visualize how exactly it will shape up. But I think looks like initial signs are positive, and I think there's lot of.
And does this also say something about the very nature of multilateral institutions or development funding? We thought in some ways that had gone away as global economies, as India in that.
But it's still required. I mean, some people do tell me that I think the absence of development finance institutions is being felt because long-term funding banks could not provide, and you don't have corporate bond markets. So where do you raise, and you don't allow pensions, etc., to participate. So there's no source of long-term funding, and I think these will be the source of long-term funding. I mean, we all often hear of development finance institutions from other economies, I think, coming in, chipping in to help us. It could be World Bank, it could be some Japanese institution.
Yeah.
So I think all those. So this is a big corpus.
Right. And is this also a sign that India is connecting or getting better connected with other players in the global economy? In this case, developing nations like us?
Absolutely. I think it is a sign of that, and
so
I think
it's more than an economic statement. It's also a sort of geopolitical
it has a potential to, I think, but I think that will before it reaches the status of World Bank, etc. It's going to take a lot of time. I mean, it's just early days. It has just started, and
but it also has geopolitical significance apart from being an economic source.
It does,
right.
and I think it brings the countries with potential to grow together, and addresses both their constraints of financing, and also I think the shocks from the global side that keep coming once in a while.
Right. And if I were to ask you a more general question, where do you think the global economy is heading in the next couple of years, and then maybe what role could banks like this or an institution like this play?
Well, I think it's always hard to forecast future. I mean, particularly if it is. But I think the point there is that what we are seeing.
I mean, we are seeing a recovery. I mean, in the global economy.
Let's step back and look at what happened after the financial crisis. The world did recover. Europe and US did not recover as fast. US recovered faster, but Europe slipped into a double-digit recession. If you look at Asia, Asia is also slowing down. I think China has materially slowed down. So there seems to be a general slowdown everywhere. I mean, that's the. But I think this year, for instance, the delta is going to come from US and Europe. But going ahead, I think doesn't look like China is going to return to 10-11% anytime soon. So I think in that kind of a scenario, my sense would be that the contribution of US, Europe, if their economies keep mending as is predicted, I think that will be significant in this.
Right.
And I think the risks also remain. I think apart from geopolitical, the financial sector is not completely out of the woods, even in Europe.
So you see that as as a sort of hanging concern somewhere, and
absolutely,
therefore,
and you require. Like I mean, see, more and more you get integrated with the global economy, the more and more vulnerable you become to global shocks, and less your ability to address those shocks. So I think you need some cushion somewhere, and we tried to do this. Last year, if you remember, we entered into an agreement with Japan, swap agreement, so that they could provide emergency funding. So there is a requirement for these kind of funds, and I think as Brazilian President adequately, mentioned it correctly that it will help them address some of the risks that come from US withdrawal of quantitative easing.
Right. And what other gates does this open up? Does this make the whole market for funding more competitive? Does it force or trigger other people or other funds to look at India more?
It's too early to
or could it? I mean,
I can't comment on that because I have not seen the full. How it is going to evolve. I think we need to watch out how things are going to evolve out of this. But it's a good initiative, and it can help all the economies, and it could actually be extended beyond the BRICS also.
And as Prime Minister Modi said, to other developing countries.
Later on. I mean, and right now, I think the vulnerability is very high among all the BRICS nations. I mean, that's true, including China. So you needed to come together. This was being visualized for a long time, and at least it has the first step has been taken in setting it up.
Right. So if you think that there's the one project or two projects or which a bank like this should first look at, were it to come together and in the next coming months and start lending, where would that be? Where do you think the first thing it should be?
Well, I think it could be roads. It could be anything. I mean, but as I said, it would be too early to think about that.
Okay, let me put it this way: which is the one sector in India that's crying out the most for funds at this point of time?
I think the roads would be one sector, but also I think what is true is that the risks in those sectors are also high. So you will have to de-risk those sectors. Only then I think the funding. It's not just the funding constraint. I think you've created other risks also. Whether it is environmental clearance or it is land acquisition. I think a host of risks plague the infrastructure sector as a whole. In some cases it's more, in some cases it's less. Now the point is, unless you de-risk this, no amount of funding is going to help. I mean,
right.
So I think you need to do both the things. I think you'll have to set the domestic house in order. Then I think if this funding comes, it'll be beneficial. I mean.
Right, so we'll take a break on that, but when we come back, we'll talk about some of those interesting macro fundamental numbers that have come in. All of them are looking good. Exports, factory output, inflation numbers. The question that we are asking, however, or going to ask is, can they sustain? That's when we come back on Policy Watch. Welcome back here with Policy Watch. This week brought cheers to Indian policymakers on three key fundamentals of the economy: industrial production, export and inflation data, which showed signs of improvement. As per the latest data released this week, retail inflation fell to a 30-month low of 7.3% in June, mainly on account of lower food prices, and including vegetables, cereals and meat. Food inflation also came down to 7.9% in June against 9.5% in May. Indian exports also registered a 10.2% growth to reach $26.4 billion in June this year in comparison with the same month last year. In yet another positive development, India's factory output soared to 19-month high of 4.7% in May this year. Growth in factory output is attributed to a robust performance of the manufacturing sector. Now, during the April-May period of the current fiscal, the index of industrial production has recorded a 4% growth as against a contraction of 0.5% in the first 2 months of the 2013-14 fiscal. Manufacturing, which constitutes over 75% of the index, grew 4.8% in May compared to a decline in output by 3% a year ago. Joining me once again is DK Joshi, Chief Economist at CRISIL, as we continue our conversation. Mr. Joshi, so this seems like news that's too good to be true.
Well, I think it was unexpected. I think inflation wasn't expected to fall so sharply, and neither was industry expected to grow to 4.7%.
Okay.
So I think, I would put it like
So when you
this.
say unexpected, you mean the economists didn't see it
Well,
coming.
the consensus, which is always biased by what you see, what you've seen previously. So there's
Right.
a very strong recency bias in any forecaster. But I think industry warming and inflation cooling is a good sign for the economy at this juncture. Now, how long will it last? I think there are risks, particularly if let's focus on.
So we'll come to that in a moment. So why did this happen?
Well, I think, as I said, one of the reasons was the manufacturing sector is getting some boost from the improved global outlook, particularly I think Europe, etc. If you look at what kind of exports have grown, which have also benefited the domestic industrial activity,
Right. So
textiles, marine products, and I think the third is leather products. So all of them labor intensive. So if I juxtapose what has been done in the budget, I think it's trying to give boost to these segments only. So I think if
which are smaller enterprises and more unorganized sector.
That's right. That's right. So I think this one element is that, and second, I think which economists often refer to is the base effect. Since the last 2 years, industry has performed the worst. It has given its worst performance in the last 20 years. So over that weak base, even I think optically, I think even a small improvement will look big.
Okay. So industrial production is good because leather, marine products and textiles have
done well. And also consumer goods have started picking up.
Consumer goods have started picking up, and that's because?
Because I think there's a confidence element also in that. I think look at automobile sector. It's also picking up because.
So we are looking at numbers which reflect a performance of which month?
This is June. This is June. I think June month.
So you're saying really things have started picking up from the month of June.
That's right. But I think if I were to plot the industrial production data over the last 2 years, you'll see that it has reached the highs several times. It has touched 4% 2-3 times, but it wasn't sustained. But I think what differentiates this upturn is that inflation. I think inflation, and also I think there is a belief that the implementation part which was suffering at that point, will pick up speed. So I think that itself gives you some assurance that things are going to be mildly better.
So that's industrial production. Let's talk about exports. So exports is the complete unexpected element in this number?
No, exports were supposed to grow. I mean, because exports are impacted more by global demand than by the domestic activity, even though US economy did not do that well in the first quarter. But I think after that, it was expected to pick up. So June data would have been impacted by what happened there in May and June. So I think that, and Europe also
is that secular? I mean, do you see that continuing? Global
I think
economy,
looks like
US, Europe?
the private consumption in US is quite strong. The first quarter got wiped out due to weather. But I think the things are not as rosy as they looked in the beginning of the year. But still, I think US is going to grow faster than last year.
Okay. So overall, the external sector is looking good. And we'll try and kind of add up the impact of all of that. So now let's come to inflation, which again you said is a surprise because we were not expecting it to go down.
Yeah, I think, I mean, inflation, there's a catch also. I mean, this is for the month of June. If you look at the vegetable prices in the market in the month of July, they've all shot up and quite sharply. So that will get reflected going ahead. But what is also...
So why did it go down then and why has it gone up now?
I think
I'm talking about vegetable prices.
Well, I think because of the lack of rains, I think that is getting reflected in the food, particularly vegetable prices. Now, I think the point I wanted to make was that this trend of decline will continue optically because last year saw exceptionally high inflation in vegetables, etc. So that's going to keep the food inflation down. But something that is getting ready to offset that is the bad monsoon. And so it all depends on the future course of CPI, depends on how government is going to tackle food inflation. They've already announced some steps that they will release food stocks or they will import onions and they'll crack down on hoarders. I think all those things are going to help. And our forecast right now is that inflation overall CPI will stay at 8%, which is the central bank target, despite a partially bad monsoon.
Okay, so you're saying that what's come down to 7.3% is going to go back to...
Yeah, I think next few months we'll see it move around in the band of 7.5 to 8%, but the average for the year is going to end at 8%.
So it also means that at the home front, prices are not really going to fall.
Prices never fall. I mean, it's just the rate of increase of prices falls. In some categories they fall, but I think overall prices always, I mean, inflation...
Yeah, you'll always have 1 or 2% at the minimum, and whatever.
Prices are going to rise. It's just the speed of increase of prices which gets worrying.
But could the basket get shuffled around?
Well, I think this year, I think food inflation will be mild, slightly milder compared to last few years, provided monsoons are not a complete washout. And right now we don't have much information on that. The information that we have is that it's a kind of meteorological drought which is
right. And I'm going to come to monsoons in a bit, but let's look at all these three numbers in the context of the projections that you as CRISIL have made about the economy. So the external sector is something that, if I'm not mistaken, you assumed were not going to be very strong this year, at least for India.
I mean, it's not. See, what's going to happen is that your exports are picking up, but your imports are also picking up because you've released some of the restrictions on gold, and also because industry is picking up. When industry picks up, the imported component shows up as increased imports. So I think so the trade deficit could be slightly larger. That is why we believe that the current account deficit, which ended last year at 1.7%, is going to be marginally higher at 2.2% this year.
Okay. So yes, that was the external sector. Let's come to manufacturing output. Is that something that is in consonance with what you've been predicting so far?
Yeah, I think we began the year by saying that manufacturing will grow at 3.6%. And since then, I think the risk of monsoon has risen. But I think there has been a greater momentum, and I think there has been some implementation of projects, more confidence. So I think we have not changed the manufacturing forecast, which is at 3.6%.
So the question that we started by asking was, is all of this sustainable? And you're saying that the monsoon is the one biggest negative factor that's hovering over all of this.
That's right.
And why is that? And why is that it can potentially impact everything from inflation to industrial output to external exports?
Yeah, it will depend on how the next other, but data till July 15 shows a rainfall deficiency of around 40%.
Okay.
So there are three types of.
And you're saying all the rains that we're seeing around right now is not enough to make up for the loss that we've.
I think agriculture follows the rules of nature. You can't plant whenever you want. I mean, I think it has to. So if there is a delay in monsoon, it is going to show up as some fall in productivity in agriculture. So meteorological drought is when the rains are below the climatological average. They're definitely below that. Now it is getting slowly, it's visible in the hydrological drought, which is the surface water gets impacted and your reservoir levels go down. That is mildly visible. And then whether it will translate into agriculture stress, I think that is yet to be seen. What we are assuming in our outlook is that there is going to be a partial stress on agriculture, not a major stress on agriculture. Let me take you back to 2012. Exactly, almost similar situation was emerging, and I think the monsoons till the 18th of July were deficient, and but they picked up later on. And the agriculture in 12-13 was not too bad, I would say. It was not too good, but it wasn't as bad as 2000.
And what were these other two factors? How were they playing out at that time? Industrial output and exports.
Very weak. I mean, in 12-13, industrial output was quite weak. I think industry was hardly growing, and that was the year when I think you had lot of policy, what is called the policy paralysis showing up, the projects not getting cleared and all that.
So how are you linking the overall clearance of projects and the things moving on that front, I'm assuming infrastructure projects and so on, to these three factors which seem to be in some ways tied to longer term triggers which have already been playing?
I think if you de-bottleneck the economy, I think it's going to help these segments also, because we've talked about mining before also, but if mining activity picks up, some employment will be generated. That's going to be mildly positive. And let me also bring in the budget in context of this. Budget has been mildly positive for manufacturing, particularly labor-intensive manufacturing, which is seeing increased demand in exports. Also, I think they put some more money in the hands of people by the tax concession. So that is going to be mildly positive for consumption demand.
But what's the layout? What's the lag time and the play-out time?
Well, I think I think the money is already, I think, in some sense in the hands of the people, because they'll have to pay less tax. So they will factor that in. They'll smoothen their consumption, so to say. So I think so if you put all these things together, I think then a mild recovery in industry, which I would still call highly suboptimal, of 3.6% is quite feasible, provided you have a partial monsoon failure. And I think good news also, the fourth good news was that monsoons seem to have picked up, though I think not so vehemently, I mean, as it's needed. But there has been some pickup in monsoons.
Right. So here's the next question: Could things get better than this? I mean, we've talked about, let's say, retail inflation coming down to 7.3%. We've talked about a factory output going to a 19-month high of 4.7%. We've talked about exports growing 10.2%. Could all of this get better?
Well, there's always a possibility, but
then what?
I think the point is that what is the probability of it getting better? It is actually lower right now, I think, and probability of things getting worse is higher, because you're seeing monsoon as a risk, which you don't know how is going to play out. And then you also have oil. I mean, fortunately, I think the oil prices are
no. So you're saying oil is affecting, a rise in oil prices affecting the aggregate basket, or these three elements as well?
Well, I think it will affect everything. Okay. It affects us fiscally, because we have higher subsidy burden.
Sure.
It makes the cost of production higher for industries, and then it also has an impact on current account deficit. So it is, I think, oil can be a killer. I mean, but doesn't look like. I mean, as of now, the sense is that oil will remain stable despite the geopolitical risk. I think there have been several geopolitical risks over the last 3 years. Iran.
So if you're saying that the chances of things going down are higher compared to things looking up, that means you're saying in effect that this is an aberration.
No, I mean, what I'm saying is the base call is that we'll get 5.5%, and this, what is happening now, is consistent with that. Now you're asking me whether things could go worse, or I mean, I'm saying the chances of things going worse are higher, and the probability of things improving is lower. But I think as more and more data becomes available, I think you can change your mind. I mean.
Okay, okay. Now, if things are to get better, then what needs to be done? Let's say in order to ensure that things either remain at the level they are, and we're talking about these 2 or 3 indicators, including exports, inflation, and factory output, or if they have to get better?
Well, I think what the government definitely needs to do is, I think wherever you're seeing sparks of hope in the export sector, you should facilitate it. I mean, whether it is textiles or it is leather, focus on trade facilitation also. Then I think on the domestic front, whatever you promised in the budget, see that it gets implemented very quickly. And
okay. For example,
I think the things like you're giving support to textile sector. I think make sure that it gets done quickly. MSME sector, whatever funds are there, they are quickly put into action. I mean, I think it should not happen that you have a committee and by the year end then it won't have that much impact. So whatever measures are announced in the budget, budget, they should be implemented in double quick time. I mean, that's what I'm trying to say, to ensure that from the domestic side, I think there's
and most of what you're saying is to do with really flow of capital.
It is apart from flow of capital, I think it's also the implementation process. I mean, so that it gets implemented. The bottlenecks are fewer in pushing that. I think all those things are also critical. Flow of funds is not necessarily sufficient. Sometimes you make the funds available, but there is not enough capacity to spend those funds. I mean, we've seen it in government spending previously. So I think implementation of what has been announced, I think, is the key to ensuring that there is support to growth this year.
Right. So, and this is the sort of argument when it comes to these 3 points. What is the other part that we've not touched upon, which could, I mean, let's look at both situations. One is positively impact the economy or negatively impact the economy.
Well, I think positively is that let's say monsoons actually turn out to be reasonably good, better than the Met forecast, and I think are well distributed in July and August. I think its timely distribution also matters quite a bit. Then I think you have then what it does is, if you have adequate rainfall, then your kharif will not suffer that much, and you'll be good in Rabi season, because Rabi is all irrigated, so your reservoirs, etc., will all be full. So that's one benign scenario. And then the growth in Europe and US doesn't falter further, as we saw the weather spoiling the growth in the first quarter, actually bringing it down to zero. And Europe also has some risks of deflation. Let's assume they don't play out. China stays on hold at 7.5%. I think so. That's and we see implementation at a faster pace than we have seen in the last couple of years. I think if you put these things, then that is generating a positive outlook for the economy. And also, I think what is critical is that government is very proactive in inflation control, because inflation does spike in bad monsoon year, but even without bad monsoon, even in a good monsoon year, it stays high. So I think you need to address some of those structural constraints, and government has announced its intent, and I think they should not they should be very proactive, particularly with imports. I mean,
right. So even if things may not necessarily swing up very soon, if we are proactive, then we can keep the bottom secure, and then hope that a few things work out in our favor, particularly monsoons. That can be the big kicker.
Right. And I think the growth can also surprise positively, because if industry,
you're also seeing the first signs of confidence. At the business level.
I think it's very important. I mean, confidence is very important, and if you believe, I think if you have a business confidence index of CII has gone up from below 50 to 54, I mean, which is a big leap. So which means the confidence factor is playing out very strongly.
Right, and that's a good note to end on. Thank you so much for coming here today, Mr. Joshi. That's all we have time for in this edition of Policy Watch. We'll be back next week, same time. Thanks for watching.